guys, just another one. Today's Saturday, 30th January, and this one's the New Zealand dollar. Okay, quite an interesting one that's happening on New Zealand. Very weak lately, as you know, and we're looking at a continuation move down, right? So, like all the other ones I've shown you, we're looking at another continuation move down, right? At the moment, initial targets at around the 57, 58 level, but it could go as low as low 50s as well. So, so just kind of look at the daily time frame. We're kind of in this consolidation pattern, right? So this bearish bearish wedge or bearish flag pattern. So definitely looking for a move down. It's just a matter of when, right? And where do we enter? So on the daily, you don't really have. There's not much to look at the daily for now, but I'll go to the 4 hour, which is the one I want to talk about. So there's quite a number of patterns that are coming up on the 4 hour. Okay, so you can see here, right, that we've just to start off, I'll draw this trend line from. So you already get this good trend line that kind of goes, down to this, touches around this level here. So what I wanted to show you was, we've got a I think there's a Gartley pattern here with a completion around the 66 level, right? We've also got a bullish Gartley pattern that completes around the 63 level as a potential buy. Going one time frame lower to the 1 hour. Sorry. We've got a cipher pattern, bullish cipher pattern on the 1 hour at the 64 level. Right? So the question now is which ones do you take, right? That's the key question, right? So it's all going to be dependent on price action. And not saying that all these will be valid, right? You could, this price could just keep going down and then it will violate all the patterns, basically, right? But I want to kind of show you how I look at this, right? So it's pretty clear if you look at the 1 hour here, this pattern here, you can already see that this one's likely to be the one that's going to be hit first, right? So how I look at this is this, right? So we look at the market and we say, well, is the market bullish or bearish, right? Overall. And overall, it's bearish, very bearish, right? Even looking at the 1 hour, it's very bearish as well. So, so within here, within the daily chart, where we already know it's consolidating. On the 1 hour, we're starting to see a lot of the consolidation as well. So we're seeing this big move down, and then we're seeing reversal, and now we're kind of going to this little channel, right? Trading within this, basically trading within this channel at the moment, right? Within that channel, and they're usually the best times to find patterns, right? Because you get these ups and downs, and that's how we get these bat patterns and ciphers and Gartleys. But for the 1 hour, I'll show you example of why. How do I know this is actually going to complete and it's actually going to do what it's going to do? Well, cipher patterns have a very high success rate, right? So provided the pattern completes, you've got, I think it's about 65% to 80%, no, 65 to 85% chance of hitting target 1 at least, right? Which is pretty damn good. So if we were to take the set of 1 hour cipher, and I'll kind of remove this for a bit, right? I'll just delete it for now. Look at that now, right? And I'll make this lighter so we can see what we're talking about, right? A little bit lighter, there we go. So how do we know? How do we know for sure, right? Is there anything else we can do, right? So if you were a really busy day and you saw this, you had to put this, you didn't have time to look at it any further, you just wanted to do it, you can literally put it in order here and just leave it there and wait for the price to actually hit it, right? Because there's a good possibility that you're going to get a winning trade out of this, right? But say you had a bit of time, you want to be sure, you want to do, a bit more thorough work just to make sure you got it right? So initially, that targets, the default targets would be around this level here. That's the default targets, right? If you can depends on your rules, but the default rules are as so, right? So let's look at the entry first. So how do we know that? What are the chances of this actually hitting that and reversing? because this could keep going down. And if it goes down, right, if you entered here and it keeps going down and it violates this level here, you know straight away that the pattern's invalid now. So then, if that does happen, you get out of the trade, right? And usually you'll place stops, right? So before you enter the trade, you'd have stops set around this level here, right? Put that there, stops. So if it does violate that, then you know that you've got your stops there to protect you. And then you will lose the trade, but you know, you've got a high success rate on this trade if you trade this over time, consistently. So yeah, so you know, just by looking at this, I can already see that there's market symmetry, right? We've got a harmonic move that completes around this level here. See this black line there? I've drawn the black lines. You've got a move that basically completes around this level here, which is within the vicinity, right? It's within the vicinity. It's not an exact science. But then you can use stuff like ratio levels as well, like Fibonacci's, to kind of help you find more, get some confirmation, right? So with that, I've got a 161, which is a reversal signal there, right? So that's right on the line. That's right on the money, right? If I move that down to, say, do it from down this level, then you get a 127, which is, again, within the vicinity of the trade. Now you've got to remember that even though the pattern's complete here, for it, that's an entry signal. But technically, price can go to as low as, 64, 190, right, in reverse, and still be a valid pattern. Just the targets will be different. You'll have to move the targets down a bit. That's about it. As long as it doesn't violate the X leg, you're fine, right? So harmonic. So if we get confluence around these levels here, I'm not too fussed about that. But the initial targets are around here. Now, as I was showing you before, where was the pattern before? I think it was the Gartley pattern here, right? And this is what I like about technical analysis and charts, because there's so many ways to make money, basically, right? So many ways to make money and so many instruments to trade, right? You can't really get bored of this, right? So, sorry, did the wrong one. So, alright. What are we going to do? Change the color to make it sense. You see it. Okay, cool. So you've got another Gartley pattern here. So so this is what I think is going to happen, right? Based on this is where you have to put in your analysis, and this is mostly experience. Right? So let's say we get a completion there, we enter the market, and we move up for target ones, right? We might go for target twos. Who knows? Right? So you get targets. Let's say we get target twos, right? And within this, you might even find another pattern, right? So we haven't got there yet. But if the price, but we could also see price reverse back down again. And if it reverses back down again, we're looking for an entry around here to go again, and the same scenario to potentially happen. Now you got to remember, this is a bearish pattern, right? We're in bearish territory, right? This is the break of structure, right? Oh yeah, that's also important, though. So this is also a break of structure with the retracement. We get the move up and then down again. So this is kind of, in a way, a false break, in a way, right? So now we've got this high there, we've got a lower high, right? Then we've gone back down to create a lower low, gone back up. Now we've broken structure again, right? This is where it gets a bit confusing, but I'll show you what I mean later. But, it depends how you look at the move too. If you look at the move as being, increments, small increments, or you look at it as one big move, basically. So. But there is a good chance that we will hit target 1 and 2, and if we do, we might see a reversal back down. If we do, we've got an entry here, okay? Now, what about this pattern here? Now, this pattern is still valid, remember, right? Provided that it doesn't violate the X leg, right? So if we get down to here, and then we rally, we could still rally and can still hit that target, and we can still look for another selling opportunity, right? But it's interesting to see how this happens. Right? Now the other scenario is that we go down to here, we don't even touch this level, we just go straight up, right? Which is unlikely for now. If we go back up, then technically if we violate these levels here, then the patterns are invalid. And if they're invalid, therefore we'd be looking for this pattern to look for a trading opportunity. But you can see here patterns, you can use them as predictive analysis, very useful. But this is also a good level because we might see this level being the top level, the top before we actually see the reversal for a continued move down. Okay. So yeah, again, multiple patterns on this. We might also, as price evolves, you will see more trading opportunities as well, more patterns form. So good opportunity there. Okay, hopefully that helps.